Nice background.
I just noticed I was talking on mute, so double check myself. So, welcome everyone. We got the tradingology.com trading room for the final session of 2020 coming to you. We got 2021 on the brink, and that's why I got the new background. So, there you go. And as always, Dave, our excellent friend from Strong Market, is here with us to close out the new year or the old year and ring in the new one.
Absolutely. A pleasure to be here as always.
We always appreciate it, sir. We got a few guys coming in, so good to see you guys rolling in.
That is a very nice celebratory background. I do like that.
I found it last minute too, so there you go.
Excellent. Yeah. So, boy, this has been quite the year. I think a little bit of review is probably healthy, and then kind of a look forward here.
Yeah, probably a good idea.
Yeah. So, how's everybody doing? Glad you guys could join us. BD is still connecting to the audio, so I don't think he can hear us yet. Good morning, Mark. Terrence, good morning.
Yeah, good to see you, Terrence. One of our more newer relatives and friends taking care of things, so good to see you for sure.
Yeah.
And if anyone's curious, the delayed data is still on my paper count, but interestingly enough, the charts are live, but the numbers at top are delayed 50 minutes, so figure that out. So if you're looking at the chart, yes, this is live. We have a little rally happening right now in the ES.
Oh, yeah.
And YM, and across the board, all the futures indexes are live. But for some reason, it's odd how they do it. So when I pull over my charts for the full index, the charts are delayed. But the charts are delayed in futures, so good times. I got to get that straightened out with these guys.
That's strange.
It's always something.
Always something, yes, absolutely. So, yeah, interesting markets. It looks like we were going to have a little sell-off here, just to kind of maybe some last-minute selling, maybe trying to harvest some of those losses for the year, so people don't have to pay too many taxes if they have some big gains.
Well, this little mini rally that we're seeing here might actually be what we see set up on the spreadsheet last night was a little bull trap, or I should say a very large bull trap, because they don't get any bigger than this.
Yep.
But we have been noticing, so a quick recap on this as we go through. Hey, good morning, BD. I see he's in the chat now.
There we are.
MT vol has been building. We were down here in the 60s, right, in the 70s for a while. Then we just actually tapped in the 90s up to 92. It came back a little bit yesterday, but very low volume. Obviously, we have the holiday weeks. We see this is down at 1,000 AVS, so much lower volumes are happening right now. There's less people, less activity in the market overall. So I think that led to some of that. But yeah, we definitely saw a bull trap forming here, so we're watching for that. So be very cautious as always. I'm personally not trading right now. I'm not live in anything outside of the asymmetric trades that are just long-term. So I'm not day trading. I'm not participating right now. So just be careful if you are long, that it could break at any time, because we do have that bull trap set up.
So one of the things I was thinking about is the fact that if in fact rates go up a little bit, capital gains, income tax, whatever it is. I mean, they even want to repeal the capital gains tax, go from 15% to your, the regular rates, whatever your income is at. If that happens next year, and it looks like it's going to be I think it's probably going to be a thing. I think they are going to raise rates. So I wouldn't be surprised to see some selling early in the year, although it'll be because those rates are going to continue to go higher. I mean, the deficit is just getting out of control. I mean, trillions and trillions of dollars. What are they going to do about the debt? I've only heard one senator. It was a senator from, I believe, Virginia this morning on CNBC talking about the deficit. I've never heard anybody else talk about it.
Yeah, it's like it's just expected now, right? We always spend more than we have. What else? What are you guys worried about? Nothing to see here.
Well, and as long as the U.S. dollar is the world reserve currency, we're always going to run a deficit. But it's really getting to the point now that if you have it in another window, the U.S. debt clock. Let's take a quick look at that at the end of the year here and see what we can kind of glean.
Yeah, I'll pull this over at the same time when I'm pulling that up just to take a look at this. Federal surplus or deficit spending. Look at this falling off a cliff.
Wow. When was that updated?
That goes through October 16th.
September. Oh, okay. Because you got September 30th there on the window there with the dates.
Yeah, I think
I think it's
pulled it up.
September 30th then. Yeah.
Okay. Yep. So that's the last time.
Wow.
But yeah, let me pull up that debt clock. I haven't looked at that one in a little while.
Right off the face of the earth.
Yeah, be careful.
Yeah, so back in 2010, 2011, we were at like maybe 9 trillion on the debt, 10 trillion, and now we're at 27 trillion. And I think if I'm not correct, the US national debt was at like 14 or something at the beginning of the year. So we just about doubled it in a year.
Well, let's see if I can go to, I haven't tried the time machine before on here.
Oh, yeah. Let's
Can
do
I
that.
dial in the beginning of the year?
Or is it? Oh, let's go to 2024. Let's look at the future.
I have to go to 26. Look at the future. It's a time machine. So
Oh,
you're
well.
2016.
That was in 16? Wow. So, I mean, I think in 2010 it was like 10, so it doubled. Well, of course, that was after the financial crisis. So, yeah, I guess that makes sense that we went up to 20 and then we added, probably, yeah, there we go.
There's 2008. That was before, right during it.
So almost triple since 2008. And we've had good economic conditions. Good economic conditions, right? For most of the time, except for this year.
Right. Then yeah, let's see what they're predicting. This ought to be interesting. So what's 2024 going to look like? We go from 27.5 trillion to 50.
Oh man. Yeah.
I'm curious. I wonder what they leverage or what they use for that. I'd be curious under the covers. Tax revenue 4.8. Where did that drop back from? Probably half of that right now, right? 3 something.
Yeah.
So the national debt doubles, but the tax revenue barely increments.
Yeah.
All things considered.
Yeah, I mean, based on that kind of projection, I mean, we must have had, they're projecting a dip in there someplace and then maybe back to some sort of normalization by 2024. But yeah.
Let's see if the population changes. US 330. Maybe the people drop. Oh, where did that just go? Oh, I did a budget showdown. Oh, that shows it's increasing by 15 million.
That's
I was just
optimistic.
curious.
That's optimistic. But
And what do they think down here is $83,400 to gold per ounce
wow.
is their prediction. Paper to gold 72, crypto 27.4. Yeah, if you guys haven't seen this one, I'm sure you have. Definitely take a look at this. It's interesting to we've never looked at the future ones. At least I haven't before.
I didn't notice
tracking where we are.
Notice they had a future.
It's crazy. Yeah, that might be a new addition that they had, the time machine here.
Yeah.
So where's the world?
We're number 1. We are number 1.
Way ahead of, over doubled Japan, and everyone talks about Japan in the last 10, 15 years and how bad things are there.
Right.
But there's the public debt to GDP, currently just under 98%. What else should we create for goods and services other than public debt, right?
Look at Europe or in the UK. They're 288%, 252% for France, Italy 151, Belgium 288, Greece 262.
Oh, Ireland.
Whoa, 1,000% over. That's insane. Netherlands 649%. Yeah. Wow. That's pretty crazy.
All right.
All right. Well, let's do kind of a review of this past year. Obviously, the big thing was the coronavirus, and I think that we had rumblings of it. We knew things were going to start to get bad. I think it took a lot of people by surprise that it spread so quickly. And we had, and one of the big mistakes I made this year was not anticipating a really big market decline in February and March, and that was kind of that was kind of that was kind of poor analysis on my part. But we did have quite the recovery after that, and at this point, we're looking out to 2021, and some of the big trends that we saw was the dollar declining, the stock market going up after the recovery. But you know what happened at the bottom of the market in March, March 23rd or 26th, whatever the date was that we were at the bottom, was the most puts ever bought by retail investors. And right now we are at the most calls ever purchased by retail investors. We also have more retail participation, individual traders and day traders in the market, the highest since 1929 in 2020. So a lot of people are predicting that, hey, we're going to have the roaring 20s again, just like we had from 1921 to 1929. And you see a lot of those headlines. I mean, at that time, the PE ratio on stocks was like 10. Now we're at 35. So I don't think that's going to happen, but you just never know. I think that people are anticipating that we're going to have a great, resurgence after the vaccine gets out. But guess what? We've had 2 million people vaccinated. They had predicted that we were going to get to 20 million by the end of this year, and it's not going to happen.
Yeah, we keep hearing whether it's supply chain issues for them, whether there's supply chain issues with everything this year is the other part that we've seen in review, right? So
Yeah.
it stands to reason that they're facing the same type of things as things still get back into what normal is. But yeah, they're having their issues for creating things and distribution of it, and they keep coming out with, I think the third one was announced yesterday, right? The UK just announced one for AstraZeneca that they're, I think, leveraging already. So I was really confused earlier this week because I saw a news channel saying, yeah, the fifth one's out. I'm like, the fifth one? What happened to the third and the fourth?
Yeah, right.
I think somebody misstepped somewhere. So I think the third one actually came out yesterday.
Yeah, AstraZeneca, Moderna, and Pfizer. Oh, J&J, I think, has something coming out too.
Maybe they're one of the fourth one to come then. But yeah, it was just one of those. So you're, as just relay back to your mentioning of, hey, yeah, we're doing this, but it's taking time. Obviously, yeah, it's going to take time, and there's hiccups, and they're starting to see some of the side effects and good and the bad. So they got to weigh all that since it is brand new, right?
Yeah, and they had quite a setback with a truck that didn't keep the temperature because the rDNA vaccine had to be at a certain temperature, and the temperature went higher than it should have been. They had to get rid of the entire
the whole truckload.
Yeah, I guess. And then there was another mix up too, and they had 300 extra vaccinations, and they were like, doing 911 calls to like fire departments and police saying, hey, look, if you haven't got it, you got to come in within the next hour to get it. Otherwise, it's not going to be any good.
Oh, geez.
So there's a lot of things that I think are, not just supply chain, but scheduling, trying to get it to people, trying to keep the temperature down. All of these things are gonna probably, that were unforeseen, are gonna hold up a lot of people getting the vaccination. I heard a woman this morning who is a supply chain in the healthcare industry. She said it's gonna be 2 to 3 years before the population in the United States gets vaccinated. That's a long time.
That's why I'm sticking with the tried and true, what's been around for years. I got my stock of regular vitamins and immunos helping. So I don't have to worry about that one.
Good for you.
That's my personal opinion. And I'm not waiting for a brand new thing to maybe not get here or do something weird. I'll stick with what's known. Everyone do their own. BD says I'm with you.
Yeah, absolutely. I mean, whatever you got. I mean, I've heard a lot of different things that people should take. Vitamin D is one, zinc is one. You know, I think you put out a video by, I can't think of his name now.
Dr. Corey?
Yeah, Peak Prosperity is his YouTube channel.
Oh yeah, Chris Martinson. Yes.
Chris Martinson, yeah. So, you know, catch up with him. He's got some great information.
Yeah, we don't have the big audiences that they do. I know we're a smaller, tight-knit community for trading, and this is definitely around trading and investing, but it is a little bit off track. But yeah, BD's saying there, ivermectin is proven cure, no need for the vaccine. Yeah, they both have their place. I can see that, you know, just trying to toe the line where I can see where some people may need it. But yeah, I'm on board with you, BD, all the way, you know, personally. Is between that and yeah, the list is up there. I'll put the link up too again. But yeah, it's vitamin C, D3. I have my list right behind me actually. Zinc, Q-serotin, and melatonin to help you sleep. Those 5 things on top of ivermectin, and it's almost 100% proven through these tests, above 90, like 90 to 100%. But yeah, check out Peak Prosperity, Chris Martinson, Adam Taggart. Those guys both do a great job on their channel. I follow those guys just for general life things and resilience. And that's the biggest thing, is being resilient. I think, and being able to take care of yourself is going to be key in 2021.
Yeah, absolutely. So one of the things that we did get right this year was the fact that we saw a top in cryptocurrencies, specifically in XRP. We had the chart. We did that about, was it 6 weeks ago, 7 weeks ago? And we did the chart showing that the September 2018 high met the XRP high this time. Yep, that's the one. And we said, you know what? That could be it. That could be the rally that everybody was anticipating. And that might be just the end of it right there. We got that right. We had no idea at the time that the SEC was going to come out with the announcement that they were investigating. They're actually taking action against Ripple, the company. And since then, since that action was taken, we've had exchange after exchange delist XRP, at least in the United States. Bitstamp was the first one. We had Coinbase. We also had Genesis trading now. I forgot, there was a couple others too. Binance US this morning, I saw an announcement about Binance US. So the ones in the US are going to delist. Now, I think at some point in the future, there might be an opportunity here. I don't know what form that's going to take. I have no idea what it's going to look like. But Dan did a public announcement that he was selling his XRP right around the 50-cent level. I sold mine around the same time, and some of it before. Actually, on the weekly chart, which you have there, we closed below the 5.66 level on that week right there. If you go up, you can see exactly where that close was. It was like 0.566 or something, or 0.555.
Looking at the green one or the red one back here, December 7th or 14th?
The green one. That was the weekly close, and it had to close above 5.666. It didn't. It closed at 5. What is that?
556.19.
Yeah, it was just a hair below. And you know what? I sold a good deal of my XRP at that point. I held on to some. When the news came out around 50 cents, well, actually, it was before the news. You and I were chatting on a Friday afternoon or something. I forget with a date, and we had a little bit left. We said, no, we're just selling it. That was before the news came out. So that was the one thing we did do right this year. We called the top in XRP pretty much.
Yeah, I know there's a lot of people that are still like, hey, I'm holding this till it goes to 0. Well, they might get their wish, but either way, it's one of those. I look at it as we had years that we were accumulating this between 20 and 30 cents, right? I think I started buying around 30, somewhere around end of 18 or 19. I forget the exact dates. I could look at my track sheet, but I started thinking about this in the big picture. And yeah, without even knowing any of this lawsuit stuff that was coming, it was okay, I've been accumulating for a year. I know I was thinking this could be a 5-year thing, but I do have a fair amount of funds tied up and I want to leverage that. And I had a couple things that happened earlier this year. I said, okay, I need access to this. So I sold some even before the rally, because I was just, doing some, hey, where do I have what position in my portfolio? What do I feel comfortable with? So I pulled back some of what I personally had accumulated just for other reasons, but I still had a decent amount. And the rally happened. And I said, okay, I could sell here. And I think we talked about, I was actually watching it the day before Thanksgiving on my phone when it actually cracked 90 cents, I think, or 80 cents on Bitstamp here that we see. Or Coinbase, I think it went to.
Coinbase at 90, yeah.
Yeah, I saw, it was the Coinbase app, so I saw it go up to 90. And I said, what's going on? It was as fast as I could get down. It was like, not that I was going to sell it because I had it on my cold storage and everything. So it all takes time for the process because it literally was only there for a matter of a few minutes. So you needed to have your sell orders in place to take advantage of that one, which most likely a bunch of people did. That triggered, which pushed it back down. But back to the original story was I was doing my own, just investing 101 and return. And I said, all right, I've accumulated this in this 20 to 30 cent range. I think I was about a 22-cent dollar cost average at the end of the day for the whole bucket. And I saw it up, after the rise and it was putting around here, the 50, 60 level. I said, yeah, I could sell some of this. So I think I did sell a good chunk at 60. Then we talked, like you said, I think it was a week or two later when I started doing this candle was like, yeah, we're not closing above. And you talked about your equilibrium level. It's like, yeah, it's another good time. It's like I could use that funds to do something else. Whereas, hey, I'm locking up my profits. Yeah, this could very well go to $1 and $2. I have no idea, right? You can't judge the future. You can just judge based on what we have. People that tell you it's absolutely going to $3 or $10 or $100. That's just, they hope. They don't know. Nobody knows.
Right.
So I just said, yeah, I'm going to sell it. I'll capture my profits if it does drop back down. And I did actually during this week, where I had some buy orders between 40 and 30 cents that did trigger. If we look at the shorter chart here, let me pull up like a 1 hour. This was before all the funny business started happening, is I did have some triggers right in here somewhere. It was where I bought them at. I think it was, well, we're back on, well, this is already, so I go back a little ways. It was probably back here.
Yeah, because I had some back there too. Did a little trade. We did a little trade like around the.
It was right here. It was, I had them in at 47, 46, 45, 44. So right here, I did buy some again. Then it bounced up and then it was like, hey, that's nice. So that's where it turned into trading versus just a buy and hold. It was like, all right, if it drops below, I'll buy some more. And my buy orders triggered. And then I sold it up here on the way before it, whatever day it was exactly. They said, all right, yeah, we can use this. I think it was the 20th. So I think I sold right at 60 cents. So it was probably right in here. And like 57 was my final. I had a couple at 57 just because it started dropping. It's like, all right, yep, that's time to get out. And then it just fell off the cliff.
Yeah.
And then all the lawsuits came out. So yeah, long story short was I looked at it as I can take profits. And I equated to, if I bought a stock at $1 or like a beaten up stock, like we talk about, right? Other strategies that we do. If I'm up 100%, I'm probably taking profits. I'm not going to wait for it to go up 1,000% on hope. So I equated that to my XRP holdings. And I said, you know what? I'm up double, triple on some cases here where, dollar cost average is 22. And if I can sell at 60, that's triple, right? That's a 3-bagger. I'm plenty happy on the stock. So I'd be happy there. So I looked at it that way where it was, hey, I got out in profits, yeah, it was a long time to hold. And that was the other part I looked at is I can probably take those funds and that capital somewhere else and I can get a quicker return.
Yeah.
And it was getting
that's the one thing that I think has, it prompted me to start selling. And I did actually sell some just like you before the big run up. I did sell some because I'm thinking, you know what? And I told this to Jay High at 139, who follows me in YouTube. He's also my neighbor. He lives in the same area that I do. We chat quite a bit. And I told him, I said, look, I'm at the end of this year is it for me for cryptocurrencies, because if it doesn't move, I've been accumulating this since September 2017. And if it doesn't move, I got to put my money elsewhere where I can get a decent return, because this is a long period. If I don't get a return, I'm going to put it where it can work for me. And so after the run up, I sold some before. I said, it's not going to go. Then it went, I sold some more and I sold some more. And my dollar cost average on that was about 35 cents. So after 35 cents, I started selling. And yeah, hey, I put my money in other things like one of my big winners this year was a stock called Veru, Veru. That was a very, very nice trade. I actually got into it around $2.50 around the beginning of November there, and the thing just shot up like crazy. It just skyrocketed. It was a really nice winner. The second one I had was BNGO. I put it into my long-term investment account, and both of these are biotech companies, and I bought it at 58 cents, and it's trading at 271 now. Looks like it hit 350 there. So I'm going to hold on to that for a little while. I'm not sure how this is going to close, but I'll probably close that one out too. There is a tremendous. My son is a biotechnology graduate from BA and a master's degree from Johns Hopkins. And we've been talking about biotechnology stocks, and a lot of them are just starting to take off. I mean, with all of the deal with the pandemic and all of the tools that they need and all of the new diagnostic equipment that they need, there's a lot of them out there right now, I think, that are going to do really, really well. So I've been keeping an eye on all those. In fact, I listed quite a few stocks that I was into in the real-time update service. So you can go back and take a look at that.
Yeah, so you guys that haven't seen that recently, definitely check out that list and do some research of your own. And obviously they're never recommendations. You guys know the drill. We're not advisors. We're just sharing what we're doing, and as much as we can help you guys with what we're doing is what we're out here to do. So if you haven't seen that list yet in the Slack channel for the real-time update service, definitely check it out. It's something to keep an eye on there.
Yeah, absolutely. So when I see some of these, when I see some of these that are interesting, like this one, like those two, I'll definitely update you in the real-time update service. So looking forward to 2021, what kind of trends, if any, are changing? What do you think is going to happen?
Well, I think it's going to be is how much will the Fed keep going? We hear Powell saying he's got more tools in his toolbox, and he's going to do everything in the power. He'll use the full power of everything, and nothing to worry about here. So it all depends on what they're doing, I think, and when they decide to, how much can they actually control it and keep propping it up. Because we've seen the pressures break, right? And we've seen things stop working. And ultimately, people and loans to banks are in control at the end of the day. So I think a lot is going to be tied to housing. Yeah, there's another 1 month extended on the moratorium for evictions, if I read that correctly, with the most recent package that they just passed. Yeah, they're fighting between the 600 and the 2,000. As far as I know, it's still sticking at 600. So there's still.
Yeah, I don't think they're going to pass that 2,000 one. I think that's stuck. Yeah.
So between that, I think they extended the moratoriums for at least 1 month. So they kicked the can to the end of January. So we'll see what happens in February for that. But I think that's a lot's tied to that for the whole market. At least that's going to be one of the big drivers I see.
Yeah. Yeah. I forgot about PLTR. PLTR was another one of my big stock picks.
Oh, I remember Planterra.
Yeah, I remember Planterra. Yeah. Yeah. It had really nice, accumulated around 950, 950, and the thing just absolutely exploded. I took profits a little bit too early on this one. I think I got out, around $11, $12, $14. But boy, it just continued to go higher. It's just absolutely amazing. So that was another nice, nice pick. And I think for
Here's the other one, very similar to your Riot and your Mara plays. You say,
oh yeah, my Riot. Yeah, that's right. I was in Riot too.
The same
Riot and Mara.
Oh, look at that. It's up to 18. I shouldn't even looked.
Oh God.
I got out around 11.
Yeah.
So 11, I sold.
In Mara, I mean, I was in Mara, like, I forgot what my entry point was. Like, it was really low, like a couple bucks. Yeah. And that thing just took off. I think I got out around $6, $7 on that. It's like, oh my gosh, that thing just absolutely exploded. And it's all driven by Bitcoin, because Bitcoin's price has gone up. It's kind of funny though. I did research on Riot, and the reason I got out kind of early on Riot, I found out that they have an incredible number of mining machines, but they only have 6 employees. They have 6 full-time employees in their publicly traded company.
Wow.
6.
That's impressive just in itself.
Yeah, I know, it's incredible. And they have 6 employees, but they have all these, I mean, they spent millions and millions on mining machines for Bitcoin. And of course, they're benefiting now for sure.
Whew.
Anyway, so for 2021, I'll let you finish. Anything else for 2021 that you wanna mention here that you see as a trend coming? Potential, let's say a potential black swan event.
Well, not to be conspiracy or tinfoil head or anything, but I've been doing a lot of reading lately, which I always am. I'm just doing different reading on different subjects, but the whole conflict and just war in general is something that drives the economy, which a lot of people don't realize until they start looking at history and why things happen when they do, whether it's the Great War, World War II, the Civil War. Do some history, do some research just on money itself, currency. Mike Maloney, thank you. But yeah, just global reserves and money, and whether it's gold or dollars or euros or yen, there's a method to the madness behind all that. And the conflict is a lot of them, especially with the most recent cyber attacks that are happening. There very well could be some black swan events related to that, whether that's Iran, China, Russia, you name it. There's all kinds of people that could step in the door there. North Korea. That could be a potential black swan event in my eye, because there's people that profit from both sides of that. And I'll just leave it at that.
Okay. Yeah, I think you're absolutely right though, because what has war been about? I mean, in hundreds of years that we've had wars, what's it always about? It's always about resources, you know, whether it's oil or it's gold or it's, you know, whatever resources that are needed around the world. It's always been about resources. And China is just voracious. I mean, they just eat up every, you know, a lot of the resources. Of course, they have billions of people that they need to feed, but they also are voracious in their appetite for growth, and gold, and, you know, all kinds of things. So, you know, steel and I mean, all the resources. So I guess if there's a military conflict involving China, that could be a really big black swan event. Definitely. Absolutely. Anything in the Middle East, anything erupts in the Middle East. And remember too that, you know, the longer we go into this pandemic, the more frustrating it is for individuals. And I think we see a lot of that frustration starting to come out, especially that, you know, that tragedy in Nashville with the camper explosion.
Oh, right. Yep.
Yeah. And then I think it was the very next day after that, after Christmas, that we had the shooting in the bowling alley. Somebody opened fire in a bowling alley and killed 3 or 4 people. All the protests. I mean, people are getting really kind of fed up, and if the social mood changes, we could see, you know, potential conflicts within the United States. That would be a black swan event, that's for sure. I mean, nobody can see the future, obviously, but it's almost like a volatility event. When you start to see little rumblings, you don't know how bad they're actually going to get. And so you start to see those ticks up higher in volatility. You start to see if social unrest was volatility, and you see those little blips and they start getting bigger and bigger, then you know that a big social unrest event could happen. And I think we're going to see more of that, especially if they don't get the vaccines out fast enough. That could be the one big driving trend in 2021 is a lot of social unrest, unfortunately.
Yeah, definitely. And that's another part that most people don't realize that ties together is just that social economic and, society itself. They
Yeah.
don't see what's causing it, but all the underlines of, hey, I go to even just looking like fast food now. Remember the days where you can go to your favorite fast food place and get something for $5? Now you go with your other half and it's $20. It's that the little bit of, they don't want to call it inflation yet, but prices of food are definitely going up. So when you're spending more of your hard-earned money on just general things, whether it's a gallon of milk or everyone looks at the price of a gallon of gas, right? That's the other part that I saw a big jump, or I shouldn't say a big jump, but a fairly decent jump the last couple of weeks where we started seeing under $2 here. It was like, hey, that's kind of nice. I haven't seen that in forever. Didn't think that would ever come back. Suddenly it's that, 209, 229, 239. It's like, oh, where'd that jump come from? So obviously with the whole pandemic and nobody driving, gas just dropped, right? Typical supply and demand. No one's driving, no one's buying gas, planes aren't flying, price of gas went down. Just the layman's look at it, right? Now that people are starting to move again and populate and travel and do some things, and there are some places that are open, some places are closed, and so the price of gas has jumped a little bit. But just going back to the whole social unrest and the whole society itself, right? And just who pays what as their dollar goes less, that psychologically drains on them, whether they think about it actively or not, and that builds on it. I think that a lot of people don't even take into account. It's like, hey, where am I? I can't even afford anything. They just get mad and things happen and bad things happen. Then fuses get lit and we're off to the races on bad things happening.
Yeah, I think a little bit of that jump in gas prices is seasonality, though. I still think there's one more deflationary event coming. I think the big event that we had in March in gas and in oil going negative was probably the bottom, but I do see it starting to roll over. So if you look at look up Brent, Brent, and see if they have a chart. I never look for Brent crude oil. Yeah. So I mean, from this chart doesn't. That's a CFD, so it didn't show the negative one. But it looks like it's kind of struggling at this point. And a lot of the financial stocks are really struggling. Oil is really struggling. I think we're going to get another dip. In this case, I don't know where this chart goes down to about $15. And so I think we're going to start to roll over again, and we're going to get one more deflationary push lower. And I think that's going to create interest rates going lower as well. Interest rates are really the driver of the economy when you think about it. If interest rates, I think I've told this story before, and I don't know if you guys remember it or not, but when interest rates in 2007, in April, before the financial crisis, it was just starting to come out. I was earning about 4% on my savings account, about 3.5% to 4%, right? In 1 week in April, they dropped down to almost zero. And what that did was had the effect of driving everybody into stocks just as they were crashing. And when people can't get it, they don't have any interest on their accounts, they're going to go into speculative assets. And that's why a lot of money has been pouring into the stock market since 2008, 2009, is because there is no interest. But back in 1981, in September of 1981, interest rates hit 15.8%. And at 15.8%, why put your money in the stock market, right? When you're going to earn an average of maybe 5 or 6% a year. And so, that one, those are mortgage rates. Yeah. So they were much higher than the actual interest rate. So back in, it was September, I believe, of 1981. If you put your cursor right at the top there, let's see what date that was. That's on mortgage. Those are mortgage rates. Yep, September 1981. Wow. Yeah, 18.36%. And you could
Probably
get
find there's a bunch here on
15%.
Macro Friends.
Yeah, 15% on your checking account. It's like, why put your money in stocks? And so everybody had the money in cash, right? And that was the bottom of the stock market. It was 9 months later, not even 9 months later, I think it was like June or July of 1982, was the very bottom of the market. And so high interest rates discourage innovation and investment in new companies. And today we have the app. Now we're getting to the point now. So there's no speculative investment at all when interest rates are high. Now interest rates are an all-time low. In fact, in the real-time update service, and I think in the Tradingology Gold chat room, or either Gold or the chat room, I put a chart of history of interest rates in the United States, and we are at a 180-year, I believe it's 180-year low on interest rates in the United States.
180 years. Just think about that.
Yeah, 180-year low. What does that do? It forces everybody into speculative assets. And if we get another decline, a little bit of a decline in interest rates again, guess what's going to happen? Now we're in a bubble. Now we're in a speculative bubble. It's complete opposite of September 1981 when interest rates are high. Nobody wanted to talk about the stock market. They've had it with the stock market. Now, especially with the number of retail investors that have gotten involved in the stock market in 2020, highest since 1929, nobody wants to have anything to do with cash. Nobody wants cash. And guess what? That's the exact time to be in cash. It's the opposite. It's complete opposite. Interest rates drive the economy. When they're too low, you create speculative bubbles. When interest rates are too high, you put everybody in cash. And it's almost the complete opposite of what you should do. Complete opposite.
Which kind of leads to about, we were talking about just debt in general, right? And I'm like, right now I was just talking to the wife. I'm like, you know what? We're full scale right now of getting rid of any debt possible, maybe outside of the mortgage. If I could pay the mortgage off tomorrow, that'd be great. But it's like, yeah, I want no debt. I'm the opposite of Robert Kiyosaki right now, where he leverages debt to do things. That's fine. Everyone's got their own cup of tea, but I'd want nothing to do with it because of the potential trouble coming.
Well, what's going to happen is I think interest rates are going to go even lower. We're going to get one push into lower interest rates, and then they're going to skyrocket. They're going to start going up. They're going to start moving higher. So my prediction for interest rates in 2021 is basically a dip lower, and then we're going to start creeping up by the end of the year. So we might be actually where we are right now or a little bit higher. And when interest rates start going up and we get a decline in, we get a sharp decline in interest rates, it means that there's going to be some sort of an event, and I don't know what it is, but there's going to be some sort of event where everybody's going to rush into cash. The DXY is probably going to, is close to, if it's not at a bottom right now, it's been rising since 2008 when the GFC happened, is because quantitative easing, rather than being everybody says the quantitative easing actually prints money. They don't. They print reserves. They put them into reserves, and it takes cash out of the system because what they want is it lowers interest rates and people put them into speculative assets. But when interest rates hit that, what I'm looking for is the 10-year and the 30-year going to almost zero. And at that point, that's the bottom. We're probably going to start moving very, very higher on interest rates. And by then, the dollar is already going to go, everything's going to go parabolic.
Yeah, so this is just a little chart as you're talking about. I pulled up and I got the two channels here long term, where one goes all the way back to 86, because when the Dixie was tracked inside of TradingView here. So I got a long-term channel on that. But yeah, as Dave was mentioning, when we started changing the game in 2008, just so happens I was the bottom when the GFC happened. So I drew a second channel based off of the lows here. And the top of this channel is just a mirror of the bottom, which lines up with these tops. So this could absolutely be a target for the top side. And I just threw in some arrows here of, this is for if you're looking at the lifetime. Yeah, if it goes down here, that'd be crazy. But since this took over, I put more weight into this purple channel because this is more of today's world and the way the Fed works and central banks in general. So that kind of overrides the historical 80s and 90s because they changed the rules in the monetary system here. So I put more weight in this channel because we see it's bounced off it, it's hit it's come down, up, down. It's it's played in this channel for since 2008, since they changed the rules. And this channel formed here basically. So 2010, so the last 10 years, it's reacted with this channel. It bounced off it here in January 2018. Remember when those events happened? Then it's kind of been slightly sideways to moving up. Then we had this year happened where we saw that activity. I circled this red part because that was kind of unique, just how I was watching things where it closed back above it. Normally it would have happened. So in September here, I was looking at, hey, what happened in September? Why didn't this react and why is it coming lower? And what's it going to do since then? So I have my arrows drawn in since I built this chart a few weeks ago. But yeah, I foresee the long term, like I think very few people, which is the other reason why it is interesting, because the big opportunities happen when you're not following the crowd, right, Dave? Because if everyone's saying do this, like everyone's saying buy more Bitcoin, that might be the thing right behind. And I'll pull that up next. But yeah, it's just the exuberance and the exhaustion of it. So why this happened, I'd have to look into more and why it didn't hold. And more of what the policy did, what did the Fed do or what did central banks do in September that might have caused this to not continue once it did close back above and stay in the channel between September and now, which, election cycles and what was happening there could be part of it and how they were trying to control things. And, but as far as the Dixie going back up, everyone's predicting it to crash. They're just going to say it's going to crash more and more it's going down. That's part of why it's like, yeah, you're probably telling everybody that because they expected they wanted to get on the wrong side of the trade. So I'm more in the lines of you're thinking, Dave, of, yeah, the Dixie's most likely coming back. I'll put my hat in that ring because I already got, long-term trades on it. We've talked about that. You guys know about it. That's our A trades. We got trades on TLT is more of the shorter one, but there's a UUP trade that we got on that a few people have watched. That's good for a year plus. I know you ran into it back in 87 or whatever, where you predicted it, but missed it by a month. So we're giving this one plenty of room to breathe where it's got over a year left. I'm not logged into my Tasty account right now, but it's definitely probably 400 days to expiration or something like that. So that's what I see, hopefully, or I should say hopefully, but that's where my money is as far as the Dixie goes. And interest rates will be part of that, tailoring back to what your conversation was there. But you got to look at the big picture. That's not day trading. That's not scalping. That's looking at, let's put it in here for a longer term. And it's not a lot of capital either. That's the best part about those asymmetric trades, is we're not tying up thousands of dollars doing this one trade. It's a very small amount of capital, but if and when it pays off in spades.
Right. And you have, think about, too bad that doesn't go back to 1981 when interest rates were at, 14%, 15%. But when you think about it too, is that, the monetary policy changed dramatically in 2007. They just didn't, there was one big run up. If you go back, let's go over to the left a little bit. There was a very, very large run up there. It looks like around 1995 to 2001. And if I think about that time period, that was the .com, right? .com was like crazy. That was the bubble of .com right there. And people were just flocking into stocks. Interest rates at that time were fairly healthy. So there's not, I mean, there's not really a correlation between interest rates and the US dollar. Although you could make the argument that if interest rates rise, it makes the US dollar more attractive and inflows to the US dollar. And I think interest rates were still pretty decent at that time. The Federal Reserve didn't have to do any quantitative easing in the 2000 and the bubble. Oh, there's the interest rates there. Yeah. So they were higher. What year?
Oh,
It
the
was-
nineties, we went from 8 and then up until 98, still between 5 and 8%.
Okay. So yeah, interest rates declined a little bit, but that's, I mean, you're talking, can you imagine getting 5 or 6% now on your interest on savings?
Yeah, who wouldn't park $1 trillion in their bank account right now that had the Fed,
Yeah.
right?
Risk-free. I mean, a risk-free return. I mean, that would be absolutely insane. That would be fantastic. And you know, we're hovering down around 1%, 1.5%. I mean, that's just like, yeah, that's nothing. That's nothing. What I think drives the US dollar more than anything is just like we saw in March, was that risk off financial assets and back into the dollar. And so, you know, by just about every single measure that you can think of, PE ratios to percent of financial assets to GDP, retail participation, call put ratio, just about everything that you can measure right now is indicating that, you know, and everybody thinks that 2021 is going to be a great year for stocks. I just don't think so. I just don't think so. I think that this trade that we had this year was a knee-jerk reaction to a lot of the vaccine announcements, especially, remember, I mean, if you look back in March, if you look at the headlines, like at the end of March, in the beginning of April, whenever a little tiny mention of a vaccine came out, the S&P was up like 30, 40 points.
Mhm.
You know, what do we have? And now that all the vaccines are out, they're ready to be distributed. What actual news event or catalyst is going to drive this market? What is there? I mean, basically the entire move from the March low was based on the vaccine. Now what?
Yeah, and stimulus, right?
Yeah, and stimulus, yeah.
This didn't happen until they released the stimulus package. This wasn't a free fall
That's
until
right.
the government said, "Oh, hey, hold on, we'll send you guys checks."
Right.
Then the market said, "Oh, hey, people, whoa, okay, the government's going to bail us out again."
How many times are they going to bail us out? They just bailed us out. They bailed us out in March. They bailed us out again with the $600 stimulus check this time. How many times can they actually do that? How many times will they do that?
That's the question. You know, you said that's when my brain first went to, you know, what do you see for next year? The question is going to be is how long will people, society, allow central banks to unlimitedly print and create money that the banks can use? So the power comes back to us as the people. If people don't take out loans, if those printed dollars don't get into the economy, it doesn't matter how much they create with the banks. If
That's
people
right.
don't use it, we control where things go.
Yeah, that's right. So I just don't see I don't see what could be possibly better than the vaccine on the news front.
Yeah, what's going to drive it? Like you say, I can't even think of something funny.
Right. I mean, the whole rally has been based on the vaccine. Now that we've got it, I mean, what else is there?
So it's got to be universal basic income that's going to drive it forward. They'll just keep printing more fake money, and that's the only thing that can drive it up.
I mean,
they keep buying more of it, and
yeah, are they just going to give us $600 checks every month?
yeah, just for the rest of your life, right?
Yeah. So I think that there is going to be, and look, from the first stimulus package, the CARES Act that they came out with in March, they have argued, they have debated, they have wrangled, they have done, I mean, they tried to get this thing passed for 9 months, the second one, and they do it. a day before, a couple days before the end of the year. It took them forever.
Yeah.
If they do come out with another one, I mean, I'd be shocked unless, now here's the key to this thing though. We've got two Senate races, right?
Yeah, in Georgia, there's a lot of power there that's actually going to come down to that. Good call.
Yeah. Two seats there. If they go red, that's going to change the complexion of the entire legislature. And if they go blue, it's a completely different story. It's a big race.
Yep, it's funny how things like that happen, and people don't think, hey, my vote doesn't count or one state doesn't count. There's times when, yeah, it does.
Yeah, and yeah, this is
one of them.
It does.
Yep.
Now, I'm not political in any way, but it looked like Trump. I mean, at some point, it looked like he was holding up on the signing of the CARES package and then calling for a $2,000 stimulus payment in order to influence that election.
Right.
Almost almost as a middle finger to his own party. Anyway, we'll see.
Did you see this yesterday? There's the first governor, I don't know where, I don't remember, but calling for verification of electoral votes. So yeah, the Electoral College voted, but it's not, what is it, the 5th or 6th that they actually open them and verify them.
That's right. And not only that, but they have to vote. The Senate has to vote, right?
Yeah.
Is it the Senate or Congress? I think it's the Senate. They have to vote to approve and certify that each of the states, the votes are certified, that the Electoral College votes are certified. And if they don't vote or they hold that up or something happens, that could be another event. I mean, geez.
Yeah, so watch for that next week. We'll probably
definitely
be chatting about it here and there, but that's another one when that vote gets certified and all that good stuff before the inauguration, which is already, I think, being canceled for parties because of what world is right now, but they'll still have it. But yeah, there's still potential events to happen with that. Then once we're out of the murky waters for there, I know people have been asking about the VXX trades and can they do it and whatnot. Once all that settles down, we can get back to business on those weekly trades.
Yeah.
So if you've been waiting for that, we'll probably wait through January. We'll see. We'll put them back on when it's appropriate. We'll let you guys know when we're leveraging that strategy again.
Yep, we'll see. Yeah, definitely. One other prediction is that decline in March is like part of the volatility indication, and we're going to see a second leg lower. So interest rates will dip, go back, and then start to pump up higher. We will get the inflation trade that's coming. So, I mean, there's a lot of interesting things going on in 2021. I just want to show my appreciation to you, Dan, for all of the work that you've done this year with the trading room and the changes in the Tradingology website. You've done a great job, and I always appreciate you. And I just thank you for being my friend. And I wish you the best in 2021 and your lovely wife as well.
I appreciate that, Dave. I try to carry on the torch as much as possible. And as we've said, I appreciate you. We keep you coming out of the weeds and not letting you retire yet, and keeping your info here. So I already got a few things cooking for next year, guys. And based on what's happened in this volatility, I've done some research and new strategies on day trading futures that's going to be coming to you guys soon, that I pulled off of a couple indicators that's available from Toss and putting things together. So that is coming. You've already seen a couple peaks of it. You guys that have watched, I think it was a video a couple weeks ago I put out, maybe a month and a half now, but based on everyday indicators and building strategies around them. So look for that in 2021.
Good stuff.
We keep doing for you. We keep bouncing with the punches.
Absolutely. You got to stay flexible. We don't know anybody. We don't know. We're not predictors of the future. We don't know, I mean, nobody really knows anything about what's going to happen in the markets, but all we can do is look for probabilities of what's going to happen and try to manage it and, navigate it the best we possibly can. And we hope you all have a successful and happy and healthy 2021.
Absolutely. Hopefully we can only go up from here. So we'll be cautiously optimistic and hedge our bets where we need to. So Dave, thank you for everything this year, and we look forward to next year. And Terrence, we got a question here. Can we roll our asymmetric trades? It's got one expiring in January. I have no idea what to do with it. Shoot us an email and we'll help you out, Terrence. We'll see what whatever we would do potentially in your shoes, or if we got the same trade on, we'll let you know what we're doing. We can
Absolutely.
obviously tell you what to do, but we'll tell you what we would do if it was in our shoes. So yeah,
Absolutely.
shoot us
Just
an
let
email,
us,
we'll take care of you.
yep, just let us know which trade that is, and we can give you. Can't tell you what to do, but we will give you some our ideas.
It might be the same one. It's probably the TLT trade, I'm guessing. So I think that's January 15th. So yeah, shoot us an email and we'll take care of it for you. With that, we'll close out 2020 and look for you guys next year. Appreciate it, BD. Good to see you.
Happy New Year.
It's good to see you, Mark. Dave, as always.
Absolutely, guys. Have a
Take it easy.
fantastic year, and we'll see you. Are we gonna resume the trading room in 2021? Or are we going to give it a week or two?
I think we will talk offline and figure out the new schedule.
All right, we will do that. Thank you very much, guys. Have a great New Year's, and we'll see you next year.
All right, see you guys.
Bye.